And welcome to this week's market review. A lot to talk about, so as usual I will go through some basics and then we can look at some shares that you are interested in looking at. By all means, ask any questions as we go along. If I don't get to them, I will come back to them, and then we can get a good cross-section of the markets. Right, I'm going to start off by looking at the US tech market, and this is Shopify that had results last Friday, and they were good results. They posted an increase, they beat forecasts, topped expectations, and there they are. Hi, Pinkesh, hi. And there they are dropping. Why are they dropping? Because their price earnings ratio is still relatively expensive. It is after the earnings, they are still up there at around nearly 29, level of 29 on the price earnings. So that's still expensive. So other examples, we've got PayPal dropping hard. These are monthly charts, by the way. So that is a gigantic fall. I mean, that is a you could argue that's a crash in price. We come all the way back down to 2020 levels. So we saw this excessive push higher in April last year. So the market was just behaving quite normally. Along came COVID. So you get the drop into COVID and then you just go crazy. Price earnings ratios just absolutely sky high. A lot of margin used. There was very excessive margin used in the Nasdaq stocks until this came off. So these stocks are still not settled yet. They've still not found a footing. I saw that they were putting in lower expectations. Anyway, but we've still got good. Let's look at Facebook. With that these are horrendous drops, and so we need to be very, very careful in this marketplace. Let's have a look at Uber. So Uber's not as bad. I'll show you which ones I do like. Ones that I am stalking, not investing in at this stage. Obviously, with a market like this, it is very, very nervous. So we've got anything from 3 to 5, maybe as many as 7 interest rate rises in the US. We've got very stubborn inflation on the back of this, and if we talk about the best things to invest in an inflationary market as well, obviously part of that is commodities. I've been talking about commodities. I've been giving more time to commodities for at least 2 years now in these sessions, suggesting that that may be the case. Anyway, let's look at let's go back and look at the indices first, and then we'll come back to stocks. But that's so with all these lovely growth stocks falling right back on themselves, caution is crucial at this stage. Right, let's have a look at the Dow. We'll stay on the monthly charts because we've only got just over a week left on February anyway. And look at these monthly charts. They are just so extended. And even now, we could come all the way back to 32, 33,000 on, well, that's not that far off, is it? We've already come from close to a high of 37,000. Here we are sitting at 34,000. So, I mean, you take one look at that, and that tells you that this market is still potentially floating in the air and not landed. So we need to be very careful. Before I forget, the US is off tomorrow, President's Day. And we have US GDP, it's GDP, isn't it, next week? I'm sure it's GDP on Thursday, I think. Should know this. No, what have we got? So this week we've got New Zealand rates, we've got European inflation. Yeah, it's US GDP on Thursday, expecting a slight increase on the last number. So the US market is expensive. Now, if you now contrast that to UK, this is a monthly chart on the UK, and we're flat. So, and this is typical with the American market. The American market tends to get pumped up, and the UK market tends to be that much more sensible. We're a sensible lot. Okay, and that's reflected in the pre-COVID high has just been, we've just literally reconnected with it at that 7,700 mark. So if this falters here, this could go the same way as the US market. But in the meantime, the daily chart, yeah, at the moment, this 74.64 is the 2021 high. So it looks as if we can come and see that. We've got a series of lower highs, and we've got a lower close on Friday, or a lower close on Thursday with a stable price on Friday. But at the moment, that looks as if that could come lower. I think if that reconnects with the 2021 high and holds, then we can start to climb. And once the US market starts to calm down and find its feet, I think that will see a push higher as well. But in the meantime, this market is jittery, to say the least. Well, the US would pull right back with still further to go. And the UK, we are stable, but short-term lower. Let's look at the DAX. And the DAX is a little closer to the US market, the behavior of the US market. This is pulling right back as well. Okay, so deeper retracements as opposed to the FTSE, which is sitting up okay. Right, let's go into I think we've still got some further lows to come. Even if we get a nice GDP number, so far we appear to be in a situation where good news is bad news. Take Shopify, Facebook, all these stocks that have had good, or in some cases decent, earnings have dropped. And I think that could be the case with, at the moment, there is no buy signal in the NASDAQ. So NASDAQ is right on a key support, and we are right down there at January lows. So if the NASDAQ is going to hold, then we're going to have to see a higher close at these levels. In the meantime, we've got 3 days of selling that's dragged us down into the January level. Typically, I find that if the market is going to reverse, it tends to do a 3-touch of a trend line, a down trend line. So we might still see that coming to 13.5. Of course, if we start holding here and start closing above 13.9 and the 14,000, then we could start to reclaim. Okay, so let's look at, let's go through a few basic commodities. Let's look at oil. You see this little, I've got this little arrow on 85. At the moment, that may be too optimistic for a pullback. Pullbacks have been very shallow in this oil so far. We did have a sell signal up there, a new high, immediate close underneath. But all we've done so far is come back to the 20-day average. And so far, every time this market's come back to the 20-day average, it's gone back. So at the moment, I would expect that Friday low to hold at the moment. I don't think we're going to see 85, but if we do see 85, I will be buying, assuming it holds. Gold has had a decent run. The gold has actually been relative to commodities overall a poor performer. If you look at, or look at in a minute at some of the industrial metals, and they have been flying. So I'm still happy to be buying pullbacks in this, and I have been buying pullbacks. I'll continue to do so. This week I would look into about the 1870, 1873 level. So if we peel back here and hold, then I think we can kind of see 1950, 1960. All right, it's a big push on volume. A lot of profit taking Friday, surprise, surprise. We are at a very close to resistance level. So if we do have a significant lower close, this could be over. And we had a nice little run up here in June last year, and then we just rolled. Like, it wasn't a massive rollover. It was a pullback. It's called a deep pullback, and then we just got really shoddy.
How's things?
Very slow.
Yeah, good man. Just busy and stuff.
Ways
just
up here.
Out and stuff. Get ready for work.
Same into the early part of the year.
Yeah, good.
Yeah,
it's good, man. Just
so I'm not overly impressed with gold. I wouldn't go and fill your boots with this at the moment. I'm day trading it. I'm not. I'm in a couple of miners, but not holding gold, physical or futures. Yeah, this is the problem. We've got a couple of UK listed miners who are very exposed to Russia, and for obvious reasons that is making life tougher. We've got sentiment is exposed in Egypt. We've got PAF is exposed in Africa. So there are miners that can avoid that Russian issue, and they are definitely performing better. Those exposed to Russia have definitely had a harder time. Fresnillo is one of them. Fresnillo's had a bounce, but that exposure to Russia has capped their performance so far. Right, so that's gold, oil, silver. Big fan of silver. It has an industrial element to it. It's really slow moving. The volume is picking up, so if you're able to pick up any $23 level, then I think that can push higher. Talking of the dollar, let's just look at, if you look at the dollar itself, so we've seen this pattern up here. So a big move into 2021. 2020, 2021. 2021 we were just grinding lower. And here we're coming to 22 with a big bounce and a pullback. So not a lot of commitment. You would have thought, I mean, if the logic says that if we get a good GDP number, this should start to grind higher. So this is one of the reasons why gold is pegged back, because the strong dollar and the potential breakout in the dollar is capping the growth in the gold at the moment. Not holding back other commodities, they are just flying. Right, let's have a look at a couple of commodities. I'll show you what is going on in the industrial metals. Here is high quality copper. This had the huge run from post the COVID pandemic upwards. We've been pretty sideways ever since we got to these highs in May last year. So at the moment, with the way the volume is and the way that is performing, I would have thought this copper needs a decent pullback. If it's consolidating like that and going nowhere, I think they'll have to yank it back. And if they yank it back to, I have to go right back here to, I have to go right back to the pandemic. So gold's up there at 45. Sorry, high quality copper is up there at 45. obviously, if you're interested in miners, this is all relevant. So we've hit that resistance level. Okay, I mean, if this stays bullish, then a modest pullback to 43, 44 might be the end of this consolidation, at which point we should go and see those highs again. So I'm looking for this. So we're seeing this pattern. So all this support has been building. So if we're consolidating, I expect us to come and see that support again. And then if it may dip underneath, as long as it eventually holds, then I can see us winding up. And if it really catches a tailwind, it could be up there at 56, 57. If it stays down here and closes underneath this level here, then we're going to wind down. But it's very bullish. So my bet is, my educated guess, I should say, is a pullback into that trend line, possibly dip underneath it and then go. I think the same goes with a lot of other nickel. That's sitting up at the highs. Where's palladium? Hang on. Anyway, let's move on. My favorite is wheat. I think wheat will still pull back some. And then if that comes back to 750 or 780 and holds, then I think we're going to go up to $10 on the wheat. Right, orange juice is the other one. I like orange juice. I think this orange juice is getting ready to go again. Huge push up into 16. I think it's going to pull back. Right, stocks. So a quick look at general stocks. We've been talking about miners. Let's talk about miners. Pan Africa punched into 21, consolidating, might well come back and see 20 again. But at the moment, that this is a tough area for it. We were up here in May last year and then fell right back. But at the moment, that's two very hefty pushes higher after Wednesday's breaking gold. So likewise, as with gold, any pullback to 19 and a half might see that go to 23 and 25 if it gets a tailwind underneath it. All right, that's Pan African. POG has been, its performance has been capped. So I just steer clear of this one. I tried to trade it some months back and just left it. And let's look at the other miners. Look at sentiment. Can't see it on my list, so I'll just punch it in. Yeah, sitting up, hitting resistance, volumes increasing. So that is, it's struggling with the pound mark, isn't it? So again, that might need a pullback and a run up to the pound mark again before, if it is going to break through. Other metal stocks, metal related stocks, JLP. That's a very shaky chart. It's back to a key level of support, but I much prefer Pan-African. Sylvanian, again, knocked its head right up against resistance. I think it's going to pull through, but I would expect it to pull back possibly as low as 95. Results on Monday, right? Thanks. Let's see. If you're not in it, stay away. If you're in it, just be careful. Let's look at Poly. So I must speed up. And why am I stalling a bit? Let me speed up. Poly. Had a nice run from these lows. Any pullback into 11, in theory, should see that start to grind higher if that process works out well. May not go back that far. This is a big signal here on the Wednesday. May only go back as far as at 11. Right. Let's look at banks. Barclays still pulling back. Now, in a environment we've got at the moment, i.e. interest rates rising, banks normally do well. So I would very much like to see that pull back a little bit further. Obviously, we've got, with all the geopolitical issues out there at the moment, we need to be very careful. But if we start to pull back and hold, then I'll jump into that one. Lloyd's doing the same, pulling back. A little bit, seen some profit taking on that one. That looks a little weaker. I think that can pull back deeper as well. Let's look at oil stocks. Tullow. Tullow is clinging on to this 50. I think if we don't hold that 50, then we could pull back into this trend line support. That would take us back into about 45, 46. We're under the 20-day average. Any market that doesn't hold the 20-day average, you need to be careful of, because that, for me, is a major litmus test. Yeah, there's still a lot of reporting to come out, isn't there? So Tullow, let's look at BP. Anybody in BP? So that's had a good little run into 413, holding, doing really well. Any pullbacks are potentially still buyable up there. Right. Any Petrofact is one I'm looking at. I think this is an interesting one to watch. Another interesting one to watch in the UK. We had a really sweet move here in December. The middle of January, they bailed out. So I'm going to update this chart actually. Because bear with me one moment. Right, okay, this is what I'm going to do. Okay, so that might well come back down to the pound mark. It's under the trend line, under the 20-day average. Volumes are looking weaker, looking as if that does want to see a deeper pullback. So I would hold back on that one. Right, let's move swiftly on to, let's now look at more retail focused stocks. Now, this is the short I'm in at the moment, which I've talked about for some weeks now. I'm still in this short. So there is a huge, it's this car factory in the UK. Card factory, not car, it's card factory. CARD is the ticker. Excuse me 1 second. I really like this on the short side. Started shorting at 64.5, took it off at 54, and got back in at 62. I'm looking for I think this might well come down to 30. The next logical place is 45. I've noticed there have been a lot of directors buying at 50. So let's see if they're right. They bought recently back in early January at 50, I think. So 50 is an obvious place for this to sit and land, but I am particularly bearish on it. I'm not seeing a dramatic increase in selling volume, which may mean I'm wrong. If you're not in it, I would sit tight. Now, if you look at let's stay on retail for a minute. If you look at next. Next started selling in, well, we had a first hint of a sale in September. We were up there again in early December, and then we're just rolling over. So this is what I'm looking for in card. And that is, so we've already come underneath July lows, and we have a gap down there at 660. Sorry, 66.60. So at the moment, I would have thought that gap will come and find. So that's why I'm bearish on Card Factory, because I think Card Factory is a rubbish brand with a fiercely competitive market. It's got a lot of, I think it's got over 1,000 shops up and down the country. So that's, you can see from this in next, and a lot of retailers are like that. Let's look at let's look at some other retailers. Apart from Minties and WH Smiths, they are doing well. Let's look at Sainsbury's, look at supermarkets. Even the supermarkets are struggling. That's just going nowhere at the moment. So I would have thought that is going to have to come lower before that finds buyers. It's running out of momentum, running out of buyers. So I would expect that to come lower. Let's look at Tesco's. So we've got a consumer squeeze, and that is showing right through in these stocks. Now that's sitting up, okay. Certainly seeing lower volume on that. I would not short that personally, but certainly seeing low volume. Right, punch anything you want to look at. Right, the stocks I'm interested in. I do like this Money Supermarket. We are holding up here on volume. So if we can hold this area here, then I think we can come and see at least 225. If at any time we close back down at these lows, or anything under 190, and that could roll over and go and find 150. But I think we have a reversal signal in on Thursday, new low, close above next day, pulled right back into that. I still think there's time. If you're interested, I would bid around about 185, 188 area with a stop under 180. If it at any time starts closing under 185, let alone 180, then that's lower. But at the moment, the volume suggests that path of least resistance is up. Like I said, I would put a stop under there. You've got to go under 180 to give it some wiggle room. But that to me is bottom of the channel, and that must be, yeah, that's 2020 lows. 2021 lows are 197. Yeah, all the more reason to look for that. Of course, it's got to close above £2, but I think that is an option. Sorry, going back to, I should have looked at Boo, shouldn't I? You bought some on Friday, right? Okay. Boo is just not doing it. It closed above 2021 lows. It's immediately closed lower, and ASOS is doing the same. So this environment is not, at the moment we only just closed under the 2021 lows. If that stays under there, then that is lower. However, if that can start to sustain 20, that looks as if that's got, that should, in theory, go back at least to 29.30 in theory. Right. Cautious tone to my voice because I don't want you guys jumping to these stocks and to see them drop, given the volatility and the threats that are out there right now. But overall, the UK is holding up and US is not. Right, and so moving on, what else was I looking at? My list. Yeah, let's go. I'm not going to carry on too much longer. Travel stocks. Yeah, I'll look at travel stocks in a second. I'm in this QQ. These guys are into cybersecurity and defense IT. We had a buy signal, well, a pin bar potential buy signal there on the Wednesday. We dropped back a little further into that Wednesday price, but held into Friday. Volumes are improving, but still not brilliant. If we close above 260, then I think we can make our way back to £3, 3.25. I need to see further evidence on that. That is still somewhat hung. Let's look at, I'm going to quickly go update on Vodafone. I got out too early on this. I got out 126. It's been as high as 140. I will look for that to pull back. I got out BT at this 198. This is where I got out. I got out 199. This is roughly where I took it off. I bought it in at 135, took it off at that high, sitting back. Where is it right tonight? It's been really quiet tonight. Rolls-Royce, I like. It's broken up and pulling back on itself. So this could potentially not work if we start closing under this 115, 110. So the jury's out. I like it. That's why I'm in it, but the jury is out. IQE. It's had a good run, pulling back on itself. So we might come and see 35, but that's a handsome push higher. Just a question of whether we can sustain it. Let's look at the travel stocks. So I want to look at Chewy as well. Look at So I'm jumping around. SEE. Talked about this one. I think if you're interested in SEE, seeing machines, then I think this is the time for you. New low, close above next day. So SEE has a buy signal. Volumes are not great. I'm not impressed with the volume, but the signal is there. So 8.4 is with a stop under 8 for that one. And IAG, yeah, so it knocked. I had that grey area there at 180, and that's pulled right back to 162. At the moment, I have to say that looks lower. I could see that going back to 148 at the moment. Let's look at EasyJet. Same thing, it's pulled its socks up and then looks as if that might go and see £6 now. Of course, if we come and land on 645 and that holds, then that will be a buy. I don't personally like these stocks, particularly with high oil and all the volatility we've got out there. But I know some of you do. Right, let's look at Chewy. In the UK. This had a great push out from January here. So we're already picking up into December. The first day in January took us up from 235, and within a matter of days we're up there at 260. This is some heavy selling going on here. I even wonder if that's going to go all the way back to 233, 230. At which point, given the performance that we've had on that assuming the overall the markets are healthy, that is a potential buy signal. Right, I'm stalking AJ Bell. The volumes are beginning to come in on this one, but I want that to close above 320. Might well go and see £3 again. Property, Hammerson. I mean, to my money, I think Hammerson is done for now, and I think that's short-term lower. Persimmon is looking lower, and let's look at the Barrett developments. Help if I spelt it right, wouldn't it? Yeah, that's struggling as well, looking lower. So a big dose of caution, a big having a reasonable amount of cash in your account, percentage of cash in your account at the moment is wise. If you look at this one, this is Jules. So it gapped down twice. Interesting note here. This is why you shouldn't bottom pick, because it gaps down. If you bought that and sold that into the gap down area, great. Otherwise, I mean, if you do want to bottom pick this, I would, well, any stock. I'm not bottom picking it, certainly, but if you are, always range the gap down bar and see which way it goes. So at the moment, we're still underneath that gap down bar, so that to me looks lower. That could potentially just keep going, if particularly we break the 50. So yeah, I'm not trading it. MBH, I don't recall bricks, right? Okay, I think I have looked at this before. MBH. Okay. Wow, it's been on a decent run, isn't it? 2020. I don't like the volumes. It's very gappy. It's under the 20-day average. I certainly would not. I personally would not trade that. It's got a lower high, series of lower highs. So if we break, we're underneath that structure. I would have thought that's going to go and see 113 and possibly lower. 110 will be an obvious place. I mean, in fact, this has been a great short. You know, it rallies up to 157, immediately closes lower. It rallied into that sell signal, didn't it? It rallied into that pin bar sell signal, which is common. And then we've been dropping, all the highs have been dropping ever since. I would steer clear. Anything else you're looking at? I'm looking at this one. Let me go and find it. Forgotten its ticker. Yeah, I'm waiting to see if this one can come down and hold. Went on a decent run to 242. I think these are commodity brokers, these guys. But if that comes down further and starts to hold, then I'm going to get interested. So we've seen 188 recently on this big drop. All we've done is we peeled back to that sell zone and then we're dropping further again. But if we do come down and sit in that support and hold on volume, I mean, right, did we talk about AJ Bell? Yeah, we did. Royal Mail, lower. That was a good performer. Again, I'm interested in that. I'm just happy to let that drift lower for now. So, seeing machines we've talked about. That's it. That's all I've got for you at the moment. IGG. Yeah, I don't think these guys are looking good. Right one? Oh, no. Can't find it. What's the ticker? I can only find the. That's only giving me the Hong Kong. It's just a US stock. Exlon. I see. Ion. I give up. I give up. I'll search for it another time. Anything else I'm interested in? No. All right. Well, I'm just being very cautious at the moment anyway. So let's leave it there. Enjoy the rest of your evening. Thanks for joining me. And I will be here for the midweek review. SSE. Okay. Let's just look at SSE. Yeah. Coming up on volume. It's too high for me. Right, okay, I'm off. Thanks, guys. See you again. Bye.